Tag and tank. Let's talk about tag and tank. How many of you from the methodology course know what tag and tank is? Right? So it's basically the same premise. For those of you that don't know, it's just basically using the 20 period moving average. When it comes into when price gets extended from the 20, comes back into it, it usually will be pretty good support. Okay, so tag and tank. Here we have a chart. As above, so below. As long as price comes from an extended point without consolidation, then the first tag of the 20 MA will be major resistance. This setup is called tag and tank. Now, if you consolidate or you're parallel to the 20 MA, would you take that trade? Absolutely not. Okay, never, ever, 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 ever. You have no odds in your favor. Okay, no odds in your favor. All right, let's go over to another example here. Here's a chart of Amgen. And again, it really doesn't matter what the equity is. The same stuff happens all the time, right? That's why I'm always looking at different stocks. The one thing you want to remember about stocks, and this is a little bit off the course for tonight, but you want to trade liquid names, volume stocks, right? Things that have volume, the institutions are always going to be involved in, and you're going to always trade right with the institution. You're not going to fight the institution. You're going to trade right with the institution because they're going to move stocks. I could buy, 2, 3, 4, 5,000 shares of Apple. Believe it or not, my 5,000 share lot isn't going to put a dent in Apple. You need millions, hundreds of thousands of shares to move equities. Okay, so you want to trade the liquid names and watch technical setups. So right here, stock comes down. What kind of pattern is this? Bearish what? Inside bar, right? Below the 20 and 50. Can you take that trade? What would you stop out be on this trade, Parham? It's going to be the red bar high. First close above the red bar high. Excellent. Yep. Red bar high. This is my favorite trade setup there is in the world. And it's been that way for, I don't know, 20 years maybe. 15 years, 20 years. It's been my favorite trade setup. I love seeing inside bars. It's one of my favorites because two things about it. One, I can calculate it, right? Whatever the red bar is, that's what you're going to get on your drop from the pivot. And if you got symmetry, you could even actually look for more, right? See look how symmetrical this is. This distance to this distance. You see it all the time. It happens constantly, not just on this stock, on every stock. Then your stop out is right here. So, you already know where you're wrong. In this business, I think the key to survival is to know where you made a mistake and to admit it and to fess up and get out. That's the key to everything in this business. Now, there are times where you're going to have to, you stick with it a little bit if you got a turn coming in the market or something like that. But for the most part, as a swing trader, you got to know where you're wrong and you got to admit it and just move on. Here you see you got the sell off inside bar. So if it gets above that red bar high, guess what? I don't want it. That's a sign of strength or weakness if price closes above that red bar. Sign of strength. Yeah, it's a sign of strength, right? Because what would that be? What would we consider that to be? You got it, David. Failed move. The best moves come from what? Failed moves. The best moves come from failed moves. All right, so take that trade. This candle right here gave you, we'll just say 5 points. You look for 5 on the downside. If you want to go for more, just take the pivot high, calculate it. So we'll say 175 to 165 is 10. Take this pivot. We'll say it's 167. Down 10 should get you to 157 handle. So there you go. You'll see the symmetry in these markets repeat themselves over and over and over. So look what happens here. Consolidate, come down into the 200. 200 right here can be viewed as what? Major or minor? You could say it's major, right? It's fair enough. You did consolidate, but it should hold. And look what it does. What does it do right here? Gives you what? Kind of pattern is that? A little choppy. Still another inside bar. Right? Once you see it's an inside bar, what should you be doing? So just say you bought it here. Yeah, get out of that thing. You don't want it. Or you tighten up your stop, or you take some profits off the table. So if it does do this, you have a smaller position now, and at least you locked in some gains. Okay? See what you got there, Jolly, but the close of the third candle is below the low. Doesn't matter. You're still inside of that red. Doesn't matter. Until you get above the red bar high, which is right there, that's still an inside bar. Right here. Yeah, it doesn't matter that you came down here. Don't matter. You're still inside that red. Once you come back up, as long as you don't exceed that red bar, that's an inside bar pattern, bearish. Especially, what is your trend? Up or down? Trend is down. Don't get cute with downtrends. Don't get cute with downtrends. They'll hurt you. I felt some pain, right, in December before the market gave us that bottom, right? Downtrends are powerful, right? You don't want to be caught in that, but that's an inside bar in a downtrend. And then you get the big gap down and, you know, a nice waterfall event after that. Real quick though, I don't want to get off topic. This is what we call tag and tank or drop and pop. Look what price does. It rallies up into the 20 MA. I know James likes this trade. Is this a major or minor right here? It's major, right? Price is coming from an extended point now. And what's it going into? What do you got there? Yeah, you got it, Dan. Red bar high. Gap window. Look at the volume in that red candle right there. Look at that. That's a monster volume. I don't want to do that. Look at the volume in this candle right here. Monster volume. So you can short that. 3 to 7 days. Once you're in the money 3 days, put your trailing stop in there. James say, Nick, on the Amgen chart on September, is the trend neutral? Well, once you see this, James, you better be careful, right? Because this is what? Is this a strong consolidation? Or is that sloppy and choppy? Triple tops right there. Let's draw that in. This is all methodology stuff right here. We got just trying to draw it as straight as I can. Forgive me. The writing tool is not so steady. But yeah, you got triple tops right there. You can't get through there. You got problems. What do we just have right now in the market? Get rid of that. I'm going to just show you modern day market since this is a good group right here. Watch. Go to the spiders. What do we just have here? Right? Couldn't get through, right? What's going to happen when we do? If we do. Boom, 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 boom. Yeah. You're going to squeeze, and what are you going to try to do? Test that red bar high. That's what markets love to do. All right? That's what it's going to do. All right? All right, let's get back. I don't want to jump off. We're going to talk more about this in a little bit. All right, so first tag from an extended point on the 20, short play. You can do it, okay? Here we have a chart of Sprint. Don't matter. Sells off, sells off. I hate single-digit stocks, just so everybody knows. Rallies up into the 20 MA, coming from an extended point. What do you got here? A lot of resistance. What kind of candle is that? Wide range red bar. Retrace. Right? Boom. This was, I think this was, yeah, this was actual trade we did. Okay. Right into that 20 MA. Can you short it at that 20 MA? Absolutely. Look what you're going into. Breakdown zone. Where would your stop out be? Right above $9. Any close above 9, you can move on out. That should not really even exceed the 618 too. That's really, really good resistance. Okay. I keep doing that. All right, drop and pop. It's the same thing. It's just the other way. Long as price is coming from an extended point, would this be support or resistance? Support. All right. Look for a bounce. All right. This trade, by the way, works a lot every day. I might do this trade probably 3 days a week. Yeah, looked a lot like Boeing today. Yeah. So here's Boeing. I think it was on the weekly, right? Yeah. Look at that. Gave it a kiss, you know, got real close, brushed up against it, and you got that pop. You see it a lot. I mean, you see it a lot. You see it all the time. And it's been working for years. Hasn't, you know, for years. But again, it's the same premise. Any moving average, as long as you're coming from a major point, that's going to be support. All right. Here we have Biogen. Don't matter. This is a weekly chart. 220 plus, comes down into the 180 level, right into the 20, pop. Right? We just had it also, what was it on? It was a Russell? Maybe not. I forget. Shouldn't wild goose chase here. No, it wasn't the Russell. Spiders. I forget what it was here. No, we're going to go back. All right, so you see it, Biogen right into the 20 MA weekly chart, and then you get a nice move. Okay, also notice the 180 whole round number. Okay, nice even number. Markets love to do that. Next one here, you got a nice big surge. This is an old one. Came down $5 even number, hit the 20, then it rallied up 50% retrace, whole round number. Same stuff applies. Okay, let's put it all together here. And Jolly saying, Nick, do you look for a 3-bar move on this too? Oh, I'm always looking for 3 bars, always. So generally, for me, I'm looking for 3 bars. But if you're doing this intraday, it could just be a quick scalp play. If you're doing it on a daily chart, you're generally looking for 3 bars. But again, once you're in the money nicely, move your stop to break even. Don't get cute with it. Depends on the equities. I always say if you're going to do this on a daily chart, a weekly chart, 3 bars is always a good rule to follow. 3rd bar, lock in some gains, move your stop to break even. All right, here we have a chart of Facebook. All right, Facebook stock traded into the 200-period moving average. Notice a 10-minute chart. Came from an extended point. This is almost always major resistance. Traders should also notice that 200 moving average coincides with the gap window and a red bar high. Multiple factors make the odds of traders' favorites to win. This was an actual day trade. So look what it did. Boom, right up in there. Can you take that? Right there as a quick short? Yeah. And then you get a nice little pullback. That's all you're looking for as a day trade. Swing trades are different. We'll look for 3 bars. Day trades, we're in and out fast. Okay, here is daily chart of Gold Corp, ticker symbol GG. Look at this, right up into the 200 MA. Notice that nice little gap. Oh, narrow body bar too. Can you take that as a short? Anybody? Yeah, you can. And this is a daily, so you could look for 3 days. Could look for a little bit more if you want. All right, where would your stop be on this? Anybody? Where would the stop loss be on this trade? That red bar high. All right, that red bar high. Yeah, that's pretty pivotal. There's also a gap there too. So there's going to be really good resistance there. All right, let's move over to IBM. Doesn't matter. Look at the crossover here. So nice little crossover. How about that 50 MA, major or minor? Major. How about the 20 MA, major or minor? Minor. 20 MA, not extended. 50 MA is, right? Everybody got that? Here we have Southwest Airlines, 64 bucks. Comes down, consolidates, comes down again. So after this consolidation here, what would the 50 MA be, major or minor? Minor. Everybody see that consolidation here for about a week? So yeah, this is minor. Tries to hold a little bit, right? More so probably because you had some prior chart consolidation there. Then it breaks. Now you're below, look at this, you're below the 20 and 50 moving averages. Strong technical position or weak technical position? It's weak. Yeah, excellent. Now you start selling off, selling off, selling off. Goes down towards the 200 here and bounces, but doesn't get there. Now, is this 200 MA major or minor? Right where my cursor is. Minor. Yeah. Poor stock. Rallies up a little bit, sells off, breaks below. What kind of pattern is this? 3 bars inside of a red. Narrow bodies too. Yeah, that's a bear flag. Exactly, bear flag, inside bar, but it is a flag. And then what does that do? So if this tells us, just say hypothetically, 55, 50, down to, we'll call it 52, 50. Basically 3 points. What would you look for on the downside? 3 points, right? Same thing. Excellent. It's a nice little bear pattern down there. Now look what it does here. A nice little reversal candle starts to rally back up. Major or minor right here? Minor, yeah, not extended. How about the bow tie necktie here? Major or minor? Major. Well done. Yep, well done. All right, Charter Sierra Wireless. We basically did this one, but it had so much to it. I put it in there again. Here we have Charter Tiffany. So check this one out. Rally, rally, rally. Look at this. Comes down, minor. How about this? Major or minor? Major. Well, what does it do? It fails. So not everything will work, right? These moving averages won't always work. And you even had a little scene in the crime there. You can make a case. But I would have said you come into the 382. That would have been probably a much, much better level, but it didn't. It's still there. Next day, you gap down and you sell all the way down and flush. And look what it does here. It goes right to the 200. Is that 200 MA major or minor? Major. Then you have a 618, just a hair above it. You play that for a bounce. It's a good level. Okay. You take it here. What would your stop out be? So let's just say you took it at 90.85, which is a 200 MA. Where's your stop out going to be? No, I'd go right below the 7.5 retrace. Because a stock like this week, it can actually get down there maybe. So you'd really want to risk that. 60-minute, yeah, you could go with, if you want to be more conservative. See this green bar right here? Put a stop below there. And if you want to give it some wiggle room, I'd probably go with the 7.5 retrace. Okay? But it's really what you're comfortable with. But you always want to find a technical point for stops. I usually love the next fib. Or you could take it, below that green bar low if you want to be a little bit more conservative. Gio saying, Nick, is there any indication to lead to believe the major point on the 50 MA wasn't going to work? Not really. Not really. But you didn't have a great secondary factor there. That's the only thing I would say. Scene in the crime is a lot better, down here around the 382 retrace. So you guys know by watching my work, I pull retraces up all the time. So I would have definitely waited for the 382 to come into play on this candle. The gap down and the run, if you see it running, you just let it fall. But even the 50% retrace failed, and there was a lot of support there. And that came down to 92. So, this chart really got hammered. But, sometimes you gotta take those trades and you'll lose on them. There's nothing 100% in this business. James saying, Nick, is there a way to know that the 50% retrace was going to fail? Not really. No, not really. That's a good level. Now, this might have worked, believe it or not, on a 10-minute chart for a quick pop and then came back down. I just don't remember it offhand. But the reason why I want to put these in there, I just want to show you guys that nothing's 100% in this business. It's all about putting the odds in your favor. Even good patterns, good retrace levels, good scene of the crimes, they could all fail. There's nothing ever 100%. That's why when traders come to me and they got nothing there, and I'm like, you don't want that. And then the worst thing that could happen is they got nothing there and it works. Then they fall into bad habits. So, you don't want that to happen either. Dan saying, Nick, high volume going through the 50. Yeah, that was definitely high volume. Yeah, Dan mentioned high volume going through there, and that's massive volume there. Hourly chart over a million. That's big volume. So the old rule is if you're falling hard and you cut through moving averages and then you get to the 200, they usually call this, we used to name this the brick wall, and you'll get your bounce there, and you can see a nice one there. But this cut through like a hot knife through butter, and sometimes that stuff will happen. Now, a lot of times, guys, and we didn't talk about this, but just so you guys know, you probably have seen me, show multiple time frames on my screen, right? So here, I might have a 60-minute chart up. Here, I might have a 10-minute chart up. But I'm looking at, I got 8 screens. So I'm looking at every single time frame as it's happening live. So, I may see something on a bigger time frame and it makes me say, hey, I don't want that one. I'm going to hold off, So you will always want to be looking at, especially as a day trader, you want to be looking at minimum your 10, your 60, and your daily. But I'm always looking at my weekly and monthlies at the same time as well. So, just keep that in mind. You always want to be looking at your bigger time frames, because there could be something. Let's just pull that chart back up. There could be something on a daily telling me I don't want this, right? It could be something on that daily chart. So you always got to be looking at your bigger time frames. But not knowing Parham, I would have probably taken it at that 50% retrace with that pattern. Yeah. Dan saying, Nick, high volume going through the fib. Yeah, that was massive volume. That's massive volume. This wouldn't have been a swing trade. This would be a day trade, hourly chart. In fact, this is a real trade. We took it. That's why it's there. So all the trades that we do that that we work. I try to snapshot them, and that's, I put them in a folder, and then later on I'll make a, if we do a new video or something, I'll point it out in there. Yes, 10 and 60 for day trading. Yes, and you also want to look at your daily too, but 10 and 60 predominantly. All right. I want to get to extended moves. All right, I know we're 9:30, but you're gonna have to. We're gonna run a little bit late tonight, but hopefully nobody minds. We're gonna at least go another hour here. Okay. Got a lot to get through, but I want to talk about extended moves. This is another moving average technique. And it's not always that you want to use this technique for a trade, but you may want to use this technique to get out of a trade, okay? And what it does is you learn when a stock becomes extended on a chart and needs to pull back. Tactic can be used on all time frames, and it can be used for anything, right? You could use it for ETFs, you could use it for futures, you could use it for commodities, you could use it for Forex. Same stuff applies. You can use this for everything. You could trade rocks. If I could chart out, trading cards, my son's baseball cards, that we could trade it, right? You could always use these techniques for everything. Traders can often buy or even sell short a stock using this method, right? If you have factors. After learning the strategy, traders will never buy an extended chart again. So how many of you have ever heard us say, hey, you're chasing the market? Don't do that. You're chasing. Don't buy up there. How many of you ever heard me say that? Maybe heard Garrett say that? No, we're not buying that up there. That's already chasing. Anybody ever heard us say that? Yeah, because we know that the stock has gotten so far away, we know it's got to come back in soon, right? So whenever a stock gets too super extended, it's got to come back because, like we said earlier, the 20-period moving average is like a dog leash. It's like the shore. It's like the tide of the ocean. Tide goes out, tide comes back in. So that's just the natural ebb and flow. You always want to trade like an institution, not like a beginner. All right, so let me explain this more. When trading stocks, commodities, or anything on a price chart, it's important to remember that price can never trade too far from the 20-period moving average. Try and think of the 20-period moving average as the shoreline at the beach. When the tide goes out, it must eventually come back in. When trading the equity market, it's important to use this technique with the simple 20-period moving average on close. All right, so let's just take a look at Boeing today before we even start this. Right, so Boeing, look what it did on the daily here. Look at that extension. Look how far away that was. So, yesterday the 20 MA was at 421. Price yesterday closed at 422.50. Look how low it went. Now watch this. I haven't even done this yet. I'm not even sure if this will work right, but it's a little hard because Boeing's at a new all-time high, and that's the only time this technique will not really give you great results. But let's try it anyway. So I'm going to take this pivot low, and I'm going to draw it straight up into the 20-period moving average. I'm going to copy that line. Now look at that. Look where price went today. Everybody see that? And this isn't even properly done because the 20 MA is way higher than what it was here. 20 MA was around 350. Here it's around 420. But just looking at that extended move, you take the low of a prior wide range move from the 20-period moving average, copy that line, put it to the current 20-period moving average, and look at how it picks out your low for you. Everybody see that? And I just did this one out of the blue. Honest to God. All right, but let me go back to the slides and show you how it works. All right, you got an idea. This can use a 10-minute chart of Baker Hughes. This is an old one. You're going to see here price got extended from the 20-period moving average on a 10-minute chart by about $1.70. Here it got extended by a little bit more, went $1.96, and you can see how price came back in. So what the public will do, or people that are not astute traders, when I discovered this technique, I kept it secret for about 10 years. I wasn't bringing it to the public, but a couple years ago, I decided to give the members a little something extra, and I brought it out. But it's still working to this very day. So I think it's just a law. And what you're going to see here is that you got a gap up, rally. How many times do people want to buy that high? And you say, no, 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 no. And look how the stock came right back in, right? So price can only get too far away from the 20-period moving average. Calculate that move, and you'll see how it goes. Just like we did with Boeing here. Even though what we want to do is have the 20-period moving average to be somewhat in the same range. I wasn't sure if this was going to work because Boeing 20 MA on this part right here in November was at around 350. Here it's at 420. So sometimes that could throw the calculation off a little bit. Okay. And Jolly saying, Nick, not seeing your chart. I'm not sure why. You should be seeing it. What are you seeing? Are you seeing anything? You might need to log out and log back in. Yeah, you're seeing Boeing. Yeah, that's what I have up, Boeing. Right? Yeah, that's what I have up. Okay, so you're seeing everything good. All right, let's go back to the slides. So here was Baker Hughes, got extended at $1.71, extended from the 20 MA. Here it went a little bit more, $1.96, and then you can see how price came right back in. Okay, everybody can see it. And Jolly, can you see the Baker Hughes chart here? Excellent. All right, let's go to the next one. Here's a chart of GLD. $17.44 point move from the 20 MA. And then look what it did here on the flip side. Same exact thing, and GLD found the bottom and then started to rally up. All right, so what it does, and it doesn't matter, you know, whatever extended move you can find, all you're doing is taking the pivot high, drawing a line directly down to the 20 MA. And once price pierces that or exceeds it, you know that it can't go much further. Generally, it'll come back to the 20 MA. Yeah. Geo say, Nick, does this work on a 10-minute chart? Absolutely. So look at this chart, Geo. Baker Hughes, 10-minute chart. Yeah. All time frames. Here we have a chart of TLT. Doesn't really matter what it is. Copy the measurement. Bring it over here. Look at how TLT got overextended. Look what it did. Hit a double top. Almost got to 95 whole round number. And then look at that pullback there. Okay. All you're going to do is copy the pivot low, draw a straight line into the 20 MA. You want to use the most biggest past extension you can find. All right. And that will tell you what will happen in the future. Now, is this 100%? No, nothing is 100%. Does it work about 80 to 90%? Yep. Works about 80 to 90%. Can it fail? Yep. Anything can fail. All right. So if you can match it up with other factors, then you create yourself a good solid risk reward. Here's a chart of Whirlpool. This was, I think this was a day trade. So look at this here. Here's the low. Here's the 20 MA, about a $7 move. Here's the gap up. This was on earnings, right into a double top, $7 move. We went short right there. Look at that sell-off. Now, obviously, we didn't ride it down the whole way, but we did catch, I think, a $2 or $3 gain that day in Whirlpool on the short side. No. You got to use the time frame that you're trading in. Yeah. So Imran saying, Nick, we might have an extended move on a daily or weekly. Can that be used for a day trade since we might not see that? Not necessarily a day trade, because sometimes those moves can be bigger. So you don't want to generally use them for a day trade. But if you could put it together with other factors, maybe you could. But I would need to see the example, you know. But generally, whatever move it makes on that time frame is usually as far as it could go for that time frame. Yeah, so for Boeing today, you had a few different things, right? You had a retrace, you had a lot of factors for Boeing today. You had a gap window area, extended move. There was a lot. There was more than just the extension, but that just solidified it all. I just did this one just now because I said, let me think of something that really got hammered today, Boeing, and you know, sure enough, look how that worked out. And Jolly saying, Nick, when you talk about max move in your daily report, is this the pattern? No. This is called max extension. Max move is actually a calculation, mathematical. This is obviously mathematical too, but this specifically is called max extension. I rarely refer to the terms unless you guys have taken the courses. So unless you've taken the courses, anybody that's come to a live event, you know, I pretty much give you everything. But unless you've taken the courses, I don't really use the terminology. But my max moves are just are mathematical calculations, and that's the one thing I don't give out on that one. Here's a chart of Google. It's a while back, but look at this: 262-point move. Down here, 256-point move, and look how Google found low. Also, what else happened on Google here? Not only did it do almost a perfect max extension, but what was this? Oh, you can make a case for that. Yeah, whole round number. Do you think a stock that trades $700, $800, $1,000 likes a 250 number? 250 is what of 1,000? Quarter. Do you guys remember in the Money Stocks course, those of you that took it? Markets love what? They love quarters, right? They love it. Oh, there you go, Gio. There you go. Markets love quarters. Fernando saying, Nick, sometimes the tail misses the moving average and bounces. Have you tried using a tolerance, say a shorter moving average? No. Sometimes if something misses by a little bit, there's usually another reason for it. It could be the volume that day. It could be another factor interfering with it. usually another reason. But that's just the nature of the business. It happens. Here's a chart of crude oil. I'll never forget the night I did this. The first time I did this was for the public. I did this for the members one time as a free seminar, and we got extended. And it wasn't even this day. It was here. And I said, this goes a little bit higher. We're going to see crude sell off tomorrow. And look what happened the very next day. So it was pretty funny. But the original presentation, I did it live. We were doing crude, and I copied the slide the next day. But I said, look at that. Max extension. We're not going to go much further. Crude will pull back. Here's a chart, a daily chart of Broadcom. This is a daily. Max extension right there. Exactly the same thing again. Here we have a chart of United Airlines. Max extension, pierced it a little bit, and has to pull back. It's just a law. Things can only get so far away from the 20-period moving average. Now, with everything you learned here tonight or that we've discussed, don't take my word for it. Go practice it. Like, go back. Gio already looked at an Apple chart where it worked. Just go back and look at different things. Try it. The only time that you might see a failure is just say, for instance, where the Boeing, today had 421 was a 20 MA. Down here, the 20 MA was at 350. That could be off a bit. In this case, it worked, so that was good. But sometimes you'll see that these things, could be off. You really generally, the safer rule is to make sure the moving average, the 20 MA, is kind of in the same vicinity. Okay? Yeah, you got it, Shaishir, like a fixed leash. Yeah, I like that. That's a good way to put it. Yep, exactly. If your dog leash, when you're walking your dog is 7 feet, you're going to basically get 7 feet. The one caveat is that you always want to make sure that the moving average is somewhat in the vicinity. In the Boeing case, it still worked, but the moving average is not in the same vicinity. There's 70 points different between a moving average here at 350 versus it being here at 420. So it still worked out, and sometimes it will, but just understand it doesn't always do that. The best odds are going to be when the moving averages are basically in the same vicinity. All right, let's take a look here at Apple. This one, I did for when Apple topped out. Remember this back in 2012. I was calling for an Apple short up here, and believe it or not, the way I did it was I shorted the Qs and bought puts on Apple. So it really was a home run. And you can see the max extension there. So it never got down that low, but I was waiting for it. Here's a chart of Mellanox. By the way, this got bought out today by NVIDIA. So you can see max extension, max extension, max extension. Here's a chart of US dollar. Max extension, max extension. Can only go so far away. The monthly chart too. All right, any questions on that? Any questions? Very powerful tool. Powerful technique. I've been using it, for so long now. Everybody got that? So just another tool you could add to your arsenal using moving averages. Now, you wouldn't realize there are so many different things that you could do with moving averages or how important they really are. So again, I know you'll get a copy of all these slides. I'm not sure you'll get them tonight. You probably get them tomorrow. But again, this is just how things work, okay? Powerful techniques. Any questions about anything regarding moving averages? Then we're going to get into the 2019 forecast. Where are we now? No questions? Excellent. All right, let's get started. Does anybody need